Carvana is circling the drain, folks. Coming up here on The Jaw. Hi folks, Alex Klingelhoeffer here with Exencial Wealth Advisors. It is 9:38 here in the middle part of the country on Wednesday. It is December 7th, 2022. Here's your morning jog around the economic headlines of the world. I want to start off with Carvana. It's down like 28% today. Apollo, PIMCO, the two largest creditors of Carvana, they've signed a deal, meaning they won't fight over the assets. They'll work together in a possible Carvana bankruptcy. Now, what does this mean? This means the end is nigh for the cash-burning auto retailer that promised to revolutionize car buying the same way Zillow did with home buying. Turns out, when you use bad algorithms to buy assets at astronomically high prices and then are unable to sell them, that's a business model that doesn't work. On a go-forward basis, this stock does not look like a winner. The bonds are probably going to come in here and just take all the assets, sell all the cars. And that, my friends, will actually mean it's kind of a good time to buy a car, but not yet. You've got to wait for Carvana to let go of all their inventory. When does that happen? Who knows? Q2, Q3 of this year, something like that. If you are thinking about buying a used car, I would strongly suggest waiting until the next couple of quarters as this giant liquidation comes to roost and assets need to be sold ASAP to pay creditors. Speaking of things that are falling off a cliff, let's talk about freight rates in shipping. Down 90% year over year, of course, right? We had huge bottlenecks. Container ships were ordered hand over fist. Now it's really cheap again to get goods from Asia to the US. Now that's going to help as China reopens, them get products out and get back to business. Now, if you look at shipping long-term and you look at container ships long-term specifically, this is crazy, right? We've normalized rates. We don't have pandemic super high rates going on anymore. And now we see tons of box ship orders. Like the order book for container carriers is like 1,000 ships large. That is tremendously large, huge. That's the only thing that shipbuilders are building right now: container ships, LNG carriers. They're squeezing out all of the other shipping sectors in terms of new order builds. And quite frankly, this could cause shipping to be cheap for decades as all of this container ship comes online in 2024, 2025. Guys, it is looking horrific for box shipping. Last but not least, before we get you off to a nice Wednesday, let's talk about oil a little bit. We'll still keep it sort of centered around shipping. You know I love the ships. Oil down a little bit here again today after just getting hammered the last couple days on recession fears. Couple of things that really caught my eye. Tanker Trackers, a reputable tanker tracking Twitter account and business, right? They use satellite imagery to track tankers. Say Russian oil shipment is down 50% over the last 48 hours because of the embargo. Now, who knows what's really causing it, but if there's logistical constraints on the moving of Russian crude oil and folks aren't buying, there are two things, really three things that could happen. One, the accepted narrative could be true. We're having 1.5 million barrels per day or so of demand drop because of recession incoming, and we just see both prices and volume come down. That seems pretty unlikely to me, right? We have China reopening. We have India continuing to grow by leaps and bounds. Traditionally, even in recessionary times, you go back, look, 2007, 2008, you are not seeing a huge drop off in energy demand. It just doesn't happen. Second scenario is that oil starts building in Russia and they have to start selling, which does reduce the price. But ultimately, if that oil does not enter the market, that sends the price skyrocketing for all other forms of crude, and we see large differentials. The most likely scenario, in my opinion, is that everything really kind of normalizes, returns to normal. We have longer trade lanes for those shipping routes, right? That oil has to go longer. You've been hearing me harp on this thesis for a number of months now. and ultimately the ships become the constraint. That's what I think will happen, right? I think these molecules are too valuable to stop moving. I think that all of the US policy, all of the EU policy over the last couple of years, really last couple of quarters, has been designed to hurt Russia but keep the oil flowing. That's sort of the thin needle that the US and EU policy has tried to thread, and I think it'll be successful. Everyone needs the oil to flow. It's just a matter of how. If you want some additional info throughout the week, feel free to find me on the internet. I'm out there. Until then, you and your family have a great rest of your Wednesday. I'm out.